Wall Street digests a busy week one of Trump's presidency. Let's talk to Liz Miller of Summit Place Financial Advisors, and I'm Lisa Bernhard with Reuters. Okay, Liz, we had an eventful, busy week of Trump 2.0. Yesterday, Thursday, the S&P 500 hit its first record high of 2025. But as an investor, in terms of impacts on markets, what's your takeaway from this first week of the Trump presidency?
I think what we saw in this first week brought down some of the concerns into year end. There was a mix of the market reacting very strongly to our change in leadership. And then, of course, there's all the campaign road speeches, and people start thinking that'll be reality in the markets. And that gave us that mixed market. And in the very first few days, I think investors went back to really remembering what it was like under the first Trump presidency from a business and market standpoint. He came out with things that were generally widely accepted and applauded in the business environment. He did not act quickly with extreme moves on some of the other things he's spoken about, and reminded investors that there is a difference between what gets executed and what gets talked about and synthesized through Congress.
Okay, so if investor sentiment is generally pretty high right now, consumer sentiment, however, for January weakened for the first time in 6 months, according to the University of Michigan's Consumer Sentiment Index, which was out today. How does that actually reflect consumer behavior going forward?
Well, remember, we do have two different sentiment measurements. There's the Michigan that we just got, and then we will soon get consumer confidence as opposed to the sentiment. And they've been tracking a little bit differently, which is really strange historically. The Michigan number today is off a little, but it did have a really strong blip up in the fall that was a nice surprise. So I'm not taking today's one data point to suggest any real change going forward because that trend has generally been up off the bottom. And we know in the recent reports that consumer spending has stayed pretty strong, if stable at the worst. So I do think we continue to have a pretty confident consumer. And if they're not reporting it, they're showing it with their activities.
Turning to individual companies, Meta Platforms is grabbing headlines today, and that stock is up after announcing it will spend up to $65 billion this year. That's a 70% increase from 2024, and this is basically all AI driven, data center driven. And this comes on the heel of the Stargate announcement from Trump, right? Oracle and OpenAI and SoftBank, just massive investment numbers here that we're seeing in AI. So when you look at this, and there'll be more down the pike for sure, is this just, I mean, is profitability a concern at all? Or are we just going to see these share prices just go off the charts and just keep rising?
Well, when we look at the companies that we've just mentioned, those with the Stargate, SoftBank, Oracle, Meta, first of all, we're starting with profitable companies. So Meta's investment, that announcement was bigger than expected, but the estimates already were 40 to 50 billion on the high end. So we're talking maybe 20 to 30% higher than originally expected by most analysts. But it does feel like AI has a piece that's a lot like the start of the internet. But the big difference is what I just pointed out. These companies are making massive investments on top of a history of profitability. So I think investors will give it some time and then start asking, where's the payback? Where's the profitability?
If you're somebody who's just hopping into stocks now, and you see all these headlines about all these investments in AI and AI being everything in the future, where do you jump on the AI train investment wise? What's the easiest place to do that?
I still think the easiest place to do that is Nvidia, and nobody's going to tell you that Nvidia is inexpensive. But depending on the growth that comes forward, it is. It is most definitely the shovel to the gold rush. You may not see the growth going forward that you've seen in the last couple of years, but they're still one of the best positioned to be a building block to what's to come. And you're not making as big a bet as a new investor into this area.